and welcome to the new edition of LM's Market Wrap, our weekly roundup of the developments which have happened in the market, encompassing the various developments in the global markets, the domestic markets, their implications on the stocks, and the overall corporate sector. With me, as usual, is Mr. Jash, Senior Investment Research Analyst, who will be briefing us about the developments in the overall macro context, whether at the global level as well as at the domestic level, which will be followed by my comments on the micro aspects of the corporate sector. So, Jash, welcome to the show, and
Thank you.
Kindly give us your observations.
Good evening, everyone. First of all, I would like to wish everyone a very happy Ganesh Chaturthi and Vachhami Dukram. I'm very pleased to be back here with Nirav sir, and as we left last week with our view on the market, we are going to do the same this week as well. So, coming back to the markets, I'll start with the global developments. Globally, as we said last week, the market is still worrisome. The factors are very worrisome as yet. Today we have to watch out for the US job data. Then we have the OPEC meet on Monday. That is what is going to drive the market in the coming week. But if we look back, we already mentioned about the Fed symposium, which we saw a very steep hike in the coming months, which led the markets decline in this week. Also, the US bond yield data that is at about 3.29%. The 10-year benchmark is at 3.29%, and the 2-year bond yield benchmark is at 3.5%. That is also a sign of worry. Going to dollar is at a 20-year high, which is also bad for the market. On the flip side, it is good for the IT sector, but going to the IT sector, as Nirav sir will say that the US recession is not going to be proved too well for the IT industry in India. Now coming to the crude oil. So the US recession worries have led the crude oil to decline by 3%, and another 2%. The decline was led by the China COVID-19 lockdowns. So all this is actually a boon for India, because when the crude oil price goes down, it is at about $92-93 a barrel. It is a sign of very positive for India.
Yes.
And now coming back to the Indian economy, I think we are placed very well over here, except for the global factors. The festive consumption is there. So starting with the Ganesh Chaturthi, we are seeing a big spend on this festival. Then the FMCG stocks are doing well. The stocks would be the more light would be thrown by Mr. Asher.
Yeah. So thank you, Jash, for your comments on the macro developments. I think the markets over here in the domestic markets, they took their cues from the global developments.
Correct.
And we had the Jackson Hole Symposium, where the hawkish comments had a negative effect on the domestic markets. And after that, on Tuesday, we saw a record buying in the Indian markets. FIIs or buyers to the tune of 4,165 crores, which in a way is a sort of records in this year. So the market mood was lifted largely due to this positive FII momentum, which was seen on Tuesday. On Wednesday, the markets were closed. On Thursday, we saw a slight downtick in the markets, again which was influenced by the global factors. So it's been a volatile week of sorts, and today I think the markets have just managed to close on a flattish note. So it's been kind of a volatile week for the markets. And what we are seeing is, as far as the sector-wise momentum is concerned, market has become very, very bipolar. So I think what we are seeing is that the IT sector continues to be under a lot of pressure. We've seen the majority of the losers of this week are the IT sector stocks, whether they are the large cap IT stocks or whether they are the mid cap IT stocks or the small cap IT stocks. Across the board, we are seeing IT under a lot of pressure. We are seeing pharma stocks which have been largely muted in the market activity. We are seeing cement stocks which are also not responding still to the development.
I think these are the sectors that created that led Nifty to drag down yesterday.
Yes, exactly. And I think the only action where we have seen as a defensive bet is the auto sector.
Auto.
Yesterday we had the auto sales numbers, and we've had kind of a mixed show from the auto numbers. But I think as far as Maruti and Mahindra, which are the largest Nifty gainers of this week, the performance was already there in the price. So that is one thing.
Yes.
And yesterday, after the auto sales numbers were out, I think the winners were clearly Ashok Leyland, TVS Motors, and Eicher Motors. These were the winners as far as the auto sales numbers were concerned. We also saw some slowdown in the commercial vehicle activity, sales of commercial vehicles, but that could be attributed to the fact that this was a difficult month as far as the rainfall distribution in the country was concerned. There are some areas of the country they have experienced very heavy rainfall, excessive rains, and that could have had an impact on the commercial vehicle sales also. So overall, as far as the commentary from the auto majors is concerned, I think they are very upbeat about the domestic markets. They are very upbeat about the domestic demand, whereas the export demand continues to be very poor. If one were to say that till now, I think
we could see it from Bajaj Auto's numbers also that export has been taking the hit.
Yes.
But on the contrary, the domestic was very good.
Yes. So I think the auto sector overall is pinning its hopes on the 100-day festival season.
Yeah, the festive season is, I think, very big for our country.
Going to be very important. Even we are seeing Titan is being one of the largest gainer of this week, and that is also on expectations that this year around the festival season as well as the wedding season is going to be very good, and that would augur well for them. Now coming to some other stocks and some other developments, I'd like to cover. One is the Adani Group stocks. We've had today an important announcement that Adani Enterprises of the Adani Group is likely to replace Shree Cement in the Nifty 50 index from September 30th. Now this is the second company from the Adani stable which is going to come into the Nifty 50. It's, I think, a very big achievement as far as the Adani Group is concerned. It will attract many more fund flows into the Adani Group stocks. Already I think Adani Ports and SEZ is part of the Nifty 50, and now Adani Enterprises becomes the second company to join this list. Another important development which has taken place is that the Nifty 50, the next Nifty 50 stocks, that list has also been updated, and we have another Adani Group company which is Adani Total Gas, which will be included in this list from September 30th. So I think this again is a very big development as far as the Adani Group is concerned. Apart from this, in the Nifty 50 next list, we are going to have three companies from the public sector space which are going to be included in this. One is Bharat Electronics Limited, the second is HAL, Hindustan Aeronautics Limited, and IRCTC. Now this is going to be, I think, a very important development. Today, if one were to see the market developments, if one were to track the market developments, we've seen tremendous action in the PSU stocks.
Yes, and defense sector is
roaring
very good
at the moment. One is today our Prime Minister Shri Narendra Modi. He has commissioned INS Vikrant at the Cochin shipyard. So I think this all the shipyard stocks are doing extremely well in trade. They've been upbeat since the last few trading sessions. So whether it is Cochin shipyard or Mazgaon docks or Garden Reach shipbuilders and engineers, I think all these stocks are doing exceptionally well. Plus with the inclusion of BEL and HAL, I think it augurs very well for the other defense stocks like BEML or the likes of Bharat Dynamics, Midhani. All these stocks are likely to be to join the action. Plus with the inclusion of IRCTC in this list, I think the other railway stocks are also likely to get a lot of fillip, whether it is the likes of RITES or IRCON or Rail Vikas Nigam Limited, Indian Railway Finance Corporation. I think all these stocks could get a fillip on account of this. So watch out for the stocks in this space. Apart from this, I think we tend to like the hotel stocks, which and today we've seen some very good action in EIH, East India Hotels. Apart from this, yes, we are seeing good action. We've seen good action today in Mahindra Holidays and Resorts, and we like Indian hotels. Apart from this, we like Indian hotels also. We like Taj GVK. And Lemon Tree Hotels. So these are amongst our focus list hotels. And apart from this, I think today we from LM's weekender list, we saw some very good action in Arvind Limited. We saw good action in Action Construction Equipment Limited. We saw JK Tires, where we have achieved the target today, and we have advised our clients to book 50% profit and hold on to the remaining position. We've seen some good movement in MHRIL, which is Mahindra Holidays and Resorts, and last HBL Power Systems, which was our weekender, which we had recommended since 30-35 levels. Today having hit 88 rupees price, after having bagged a coveted order from the Indian Railways for Kavach equipment. So I think it's a very prestigious order which it has won in collaboration with Siemens. So the stock continues to do pretty well. I think these are some of the developments with respect to the markets. And
so I think we remain strong with our festive demand.
Yes.
Driving the markets up, and also our country has been getting record GST collections.
Yes.
So that is also very positive aspect for the market. It has been above 1.4 lakh crores for the 6th straight month. So that we see that good business happening in our country, and that is only going to improve in the next few months.
Overall, the view is that stock specific, we could see good traction wherever the companies are performing well, where
the market is rewarding the stocks.
Market is rewarding those stocks. So that comes to the end of our session. I think you can revert back to us with your views on the same, and we look forward to meeting you in the forthcoming edition of Market Lab. Thank you, everybody.
Thank you.
Thank you.